Hey everybody, welcome to Money Matters with our one and only mentor, money mentor, Marshall. Hey Marshall.
Hi Mickie, how are you today?
I'm doing great. And I'm just the lowly mentee, the money mentee Mickie. Yeah.
What are you talking about? What are
Well,
you talking about?
Because I'm always learning from you. So you're my money mentor.
Well, I am much older than you, so.
Well, I'm not going to dispute that. So, why would I? But I feel like there's so many people out there that would love to have a money mentor because today's topic is how the rich get richer, and so many people would love to know the secret to that. How do the rich get richer? And I know you've been sharing a little bit with me that you feel like one of the biggest ways that people can really springboard themselves into their financial future with financial success and independence is through assets versus liabilities. So we're going to touch on that a lot today, I think, right?
That's right. And we did a short Instagram recently, I think was pretty popular about why the rich get richer. And the premise of that was, all my life growing up in the South, and Southern culture, the rich just get richer. They just get richer. And it was like nobody knew the answer to that question. Why do they get richer? And so it started dawning on me, wait a second, I know the answer to that question. The rich get richer because they buy assets. They spend their money in wise ways. And it was like, and I won't share how recently I realized the answer to that question because, when you're young, you hear people, your cousins, your uncles, your grandparents saying, I don't know, they just get richer. And now I know the answer to that. And I think that Instagram kind of sparked some interest. So happy to talk about that.
Oh, most definitely. It was on Instagram and also YouTube. It's in your YouTube shorts. And those of you who haven't been checking out Marshall's shorts, you should get on YouTube. His shorts are great. So you've got a lot of viewership there for your shorts there, Marshall. Those are under the Marshall Minutes. So that's where you're going to find that. But yeah, absolutely super popular. A lot of people are interested in that. So I think we should probably just dig in. I mean, when it comes to assets and liabilities, what's the difference between the two? I mean, I know it sounds like probably a simple, like it should be very simple, but really there's a lot of ins and outs for that. So tell us, what's the difference?
Yeah, so an asset, there's a lot of technical definitions of assets, real estate, land, investments, that kind of stuff. And then there's liabilities, right? So liabilities are things that you're liable for, that you're responsible for. And so the simple way that I explain this and that I've heard other people talk about is an asset puts money in your pocket. A liability takes money out of your pocket. All right.
Do you have a pocket or something that you're messing around with there?
A pocket, my pants pocket right here.
Well, I wasn't sure what you were doing. You never know with you. Oh my good Lord, what are you doing?
Yeah, I got my pocket. So if it puts money in, it's an asset. If it takes money out, it's a liability. Okay. So we were going to go through different types of assets and liabilities, but it's important to understand that. Also to know that assets minus liability equals what, Mickie? Assets minus liabilities equals what?
Wait,
math question for you.
Assets minus liabilities equals what money I may or may not have.
Net worth.
Oh yeah, net worth. I know that. I wasn't sure where you were going with that. Oh my God, you're making me do math? Come on.
Yeah.
Come on. I'm not the numbers person. You're the numbers guy.
I know. I'm sorry. I put you on the spot there with a math question right in the middle of this. Assets minus liabilities equals your net worth. Right? Yes. It's what right. Financially. It's not what you're worth as a person and all that, but it's what you're financially worth. And so it's important to know the difference. When you're spending money on something, you got to know the difference. And that's what this is all about. So an asset puts money in, a liability takes money out. How's that? Simple.
That sounds good to me. Sounds
Yeah.
simple enough. Okay,
Yeah.
I like that. That whole in the pocket, out of the pocket. As long as it's in my pockets, I'm all good.
That's right.
Yeah. So if I was to start getting more actively involved in investing in assets, what are some of the more common assets that I could actually invest in? Now, we all know, I know real estate. Yeah, I know. But come on, what are some other things besides real estate?
Well, the thing about real estate is, I mean, how much money do you have to buy a piece of property there in your local hometown? How much do you need?
It really depends on where you live or where you're buying, right?
I know, but how much? 100,000? Can I buy some for 100,000?
Outright? You could probably buy a little piece of land.
How big?
Not much. Depends on where you're at. So, I'm just saying. I'm thinking California off the top of my head, but if I was thinking Tennessee, you could probably buy a little bit of a bigger piece of property. And, if it really just depends. That 100,000 can look different all across the country, all over the world.
That's right.
So,
So what if I told you could buy an asset for $100 in one of the greatest companies in the history of mankind?
Wait a minute, $100,000 or $100? $100? You mean $100 that I wish I had in my pocket right now?
No,
but
you have in your pocket. You have $100.
Okay, I have $100 in my pocket, and you're saying I can invest that. And
you could buy an asset.
Okay, do tell. Do tell.
So the point is, for $100, you can buy one share of Walmart. Okay.
One share.
Walmart. I mean, some people don't like Walmart, but I like Walmart. I'm a redneck, so I like it. So you can go in there and see the world. It's like
oh my God.
See the world. Yeah. So
you can see things coming out of those pockets when you go into Walmart that you don't want to see coming out of people's pockets.
Exactly. So instead of spending that extra 100 on whatever, I was just looking. You could buy one share of Walmart stock for $99.31. Okay. That's an asset.
Okay.
Now, if you go into Walmart with $99 and you buy, a leisure suit and some socks and shoes.
What the heck is a leisure suit?
Leisure suit. I think I just dated myself. What a leisure suit. What is a leisure suit? A leisure suit, a workout suit. What I meant was a workout. That's modern day. The modern day leisure suit is a workout, like a workout. What is a workout suit called nowadays? Anyway.
I'm still stuck on leisure suits. You mean like sweats?
Sweats, that's it.
Oh, but like if we were back in the 1950s, a leisure suit.
No, 70s.
70s. Oh, like if this was like the Bewitched show or something.
Well, leisure suit was the knit suits with the long collars, right? So the equivalent of that is a sweatsuit at Walmart now. And if you go in there, you see people wearing these leisure suits everywhere. So the question is, are you going to spend your $100 on a new leisure suit, or are you going to buy one share of stock of Walmart stock?
I don't know. Why should I buy the Walmart stock?
Because over time, it's going to increase in value. It's going to put money like dividends into your pocket every quarter.
That's why it's an asset.
So imagine instead of buying the leisure suit, you buy the stock. Okay. Fast forward 1 year.
Yeah.
And you've been wearing that leisure suit every day for a year.
Oh, God.
What is it worth? What is it worth in a year?
Probably not much.
Not much, but what is that $100 in Walmart worth in a year?
Probably somewhere around that $100, maybe more, maybe a little less, but probably, yeah.
Most likely more, and if you hold it for 5 years, it's going to definitely be worth a lot more.
Okay.
Right? So that's the difference between an asset and a liability, and And so, yeah, so some people can't spend $100,000 on a piece of property or $10,000, but they can spend $100 on a share of Walmart stock.
Yeah. And
Okay, so that's the difference between buying an asset and a liability in real simple, silly terms. Okay. And so when you look at the different types of assets you can buy, we recently did a newsletter to clients. So stocks, right? You can talk about, you can buy bonds. I'm not going to talk about bonds. You could hold cash. Cash is an asset, right?
Yeah.
You can hold cash in a savings account. Now, you don't want to hold cash for long periods of time because of inflation and all kinds of other issues, but holding cash, saving money. And we always recommend people to have an emergency fund of 3 to 6 months of expenses in cash. When you look at your assets minus liabilities equals net worth.
Net worth. Oh, I didn't know you were asking me to respond. Sorry. Interactive show here. Hey, everybody. What's he saying? Oh, yeah. Net worth. Woo! Got
net
it.
worth. Cash
Word
is on the asset side. Cash is on the asset side. Okay.
Wait. What were you? Oh, okay. Cash is on the asset side. Leisure suit is definitely a liability. Please.
A liability.
And the leisure suit you were describing, that's an ultimate liability. Please do not wear that. That would be a crime to humanity. My goodness.
So stocks, bonds, cash, precious metal.
Oh yeah. Did you know, I've heard you can buy the gold bar things, and I don't know if this is true, so people please fact check me. I don't know, but I heard you can buy the gold bars at Costco.
Yeah, you can.
Don't know if that's true, but check it out. Let me know. Put it in the comments if that's still true or not, because I don't know. I haven't bought them there.
Well, you can, and it sells out really, really quickly.
All I know is when I leave Costco, I think I leave with a cart full of liabilities and no assets.
Yeah, you probably do.
Yeah, and I don't like.
I'm just doing a quick Google on the Costco Gold bars and what you can buy 1 ounce. Okay, so you can buy 1 ounce. A 1 ounce. I don't know how big an ounce is of gold. How much is an ounce? You cook? You cook?
Yes, I cook.
How much is an ounce?
It depends on what it looks like. I mean, if it's fluid or if it's a solid powder. I mean, come on.
Okay, 1 ounce. Anyway, the point is 1 ounce. The gold bars at Costco are 1 ounce.
Okay, I believe you.
Okay, the price of gold, I just looked it up today, $2,991.
Wow.
Yeah. Okay.
And I can get that Costco on sale. Can I get that for $400, or do I have to pay the $29.9?
Yeah, $29.91. Yeah.
That's not a bargain.
Well, that's the price of gold. So here again, stocks, bonds, cash, gold. Okay, now you could buy a half one. Go in there with your friend and cut it in half and split it. Go up to the thing. I'm sure they would love that for you. You're in there cutting your gold bar in half, chipping it off. Right?
Can you do that?
No.
I mean,
you can. That's the history of money. That's why they don't make gold coins anymore, because they would chip gold flakes off the edge to make them smaller, so they had to hold some of it back and then trade it.
Yeah.
And so that's how they used to do it with gold coins.
Oh my God.
Okay.
I've got
so anyway, there you go.
You
start for $100. You could hold cash, right? You could buy gold at Walmart for $2,900, right? You could buy real estate. We talked about real estate, right? Or you could own a business, start a business.
Yeah. Mm-hmm.
That's a big, that's a great asset. Now there's a lot of risk with that, but gosh, the returns in a private business can be amazing.
Absolutely. And you would know.
Right? And I've shared this a little bit, in I think one of the other webinars and stuff we did, but that's what put me on a different track as an investor. Because when I turned 40 years old, I was determined to run a business, start my own business.
Oh, so when was that? You turned 40? So was that like last year?
A long time ago.
Oh, okay.
A long time ago, but it was the best thing I ever did, other than marrying my wife and having 4 boys.
I'm not his wife. But I'm just saying, I think that's sweet. And I hope that she loves that so much.
I know. So that transition was, let's see, like 21 years ago now, 21 years ago. Okay. So that was when I was 40, I'm 62. And so I'll be 62 next week, by the way, on the 12th. Have you got my gift yet?
Mm-hmm.
My gift?
Yeah. Sure.
You didn't even know it's my birthday.
Yes, I know when your birthday is.
Next Tuesday.
It's next Tuesday. Am I right? I know when your birthday is. Bet you don't know when mine is, and don't say it. Nope, because I know where the conversation will lead, and people are here about assets and liabilities. They don't want to know how young I am because they will just be jealous. So
that process of going into the business and buying an asset called a financial service business was a great investment, one of the best investments I ever made.
Yeah.
Right. And so I love working with business owners because I understand what that's about. Finding clients, finding customers, people in the door, hiring people, paying them, right? Paying rent, all of that stuff, and trying to grow the business by adding, oh my gosh, it's so hard, but it's so worthwhile.
It is.
So I love working with business owners. So if any business owners are out there listening, we can help you with retirement plans, start with simple IRAs. We can do SEP IRAs. We can do 401k plans, all kinds of stuff to help you put some of that money away and keep it from Uncle Sam. Do you know Uncle Sam? Have you met Uncle Sam?
I have. I'm not a fan.
Not a fan. Uncle Sam's looking for Mickie.
I'm not a big fan of Uncle Sam. No, I'm not. No.
So,
but
anyway, that was my pitch for ownership. And then also a couple other assets you can buy. You could buy cryptocurrency. People ask about Bitcoin all the time. Now that's controversial whether you think that's an asset or not, but
it's fun though.
People are starting to believe.
Oh yeah. Yeah,
So,
things have turned around a lot more recently for crypto.
Yeah.
So yeah, and there's a lot of reasons for that, and that's a whole other podcast show on crypto that we should do soon because it is fascinating what can be done. I'm curious, what are some liabilities that people think are assets, but they're really liabilities?
Well, other than a leisure suit?
Other than a leisure suit?
Your couch.
Okay.
Your couch is a liability. Anything that loses value over time, anything that goes down in value, right? What cars? Right? Most cars go down in value over time, especially when you drive that new one right off the lot and it drops
immediately
a lot.
Yeah.
Right? Now, there are classes of cars that will hold their value better. Classic cars can be good investments depending on that, but you got to be an expert in that. You have to have an expertise with that. But cars are not assets.
Right. Unless they are particular classic type cars. And like you said, you have to have that expertise because so in other words, something like a classic car, that could be both. That could be an asset, but then again, it could be a liability depending.
Yeah. So I've got another liability that's might make you upset.
Oh no.
This is controversial. I'm just going to say it.
All right.
Your house.
That does make me upset.
I know.
I disagree with you wholeheartedly right now. I want it on the record. No, disagree.
I knew you would, but the difference is you own your house and you pay the mortgage, right? Let's say you buy another house and someone else pays the mortgage. That is an asset because someone else is paying for it for you.
I do agree with that point.
Okay.
But I disagree with your first point. 100% agree with your second point. Yes, bravo. Buy a house, rent it out, and make sure it's cash flowing. Yes, that's awesome. Love it. That's always something I recommend to all my clients to aspire to do that if they're not already doing that.
That's right.
But I disagree with you on the first point because I look at it this way. If I'll put you on the spot, but you'll know how to answer it. I know you will. Okay, if you aren't owning a mortgage, if you're not buying a house, then what are you probably doing?
That's right.
You're doing one of two things. You're probably renting, or you're bumming around on someone's couch or in someone's basement. Yeah, come on, people, help out around there. So anyway, let's say you're renting. When you put that money out for rent, what are you getting back for that money? Pretty close to nothing. You might get a renter's credit on your taxes. That is nothing, people, compared to the tax write-offs, the equity that you could be building, and so on and so on and so on. There's a lot, depreciation and so on, all these great things if you buy a house. So I disagree with you, Marshall. And all
right. So I'll give you this. If your house is paid for and you don't have a mortgage, then it's an asset. How about that?
I agree with that third point too. I still disagree with your first point.
Okay, so here, let me ask you this. I don't want to get in a fight. I don't want to get in an argument. Let's say you stop paying your mortgage on your house. What's going to happen? You're going to find out who owns the house.
Well, yes. And I do like people to understand that you own a mortgage. You don't own a house.
Right.
That's the way I look at it. However, there are so many more benefits in the long run of putting out, let's say your rent is, just to be an even round number, $2,000 a month. Okay. If you're paying $2,000 in rent, you're getting nothing back. You get a roof over your head. If you're paying a $2,000 a month mortgage, you are earning equity. You are getting tax credits and all kinds of great things. So that money for money, dollar for dollar, in my humble opinion, buy something, buy property, buy a home, whatever. And that's better than throwing your money away in rent. But that's okay. Sometimes we don't agree. Shocker.
And what I'm trying to make the point of is you don't have to wait to buy the house to buy assets. You can start buying them today.
Oh, I agree. Yeah.
Right. And start saving and putting money in the cash so that they can put the down payment on the house and all that. Right. That's what we're trying to get people to do is today put some money away.
I love it. I love it. Yes. So. Look at us agreeing on some points. Woo. Wow. Well, I want everyone to know that I'm so thrilled that they stayed with us to the end, because we have a great resource for all of you. And let me pull it up. 2 resources I want you to know about. One is a little while back, Marshall, and it's coming up in the ticker right there. You go to to our website, and he did a webinar on building assets, and it's free. We love that. It's our favorite 4-letter word, free. Okay. So go there, get that. It's constantly going. It's an evergreen webinar, so you can go and check it out. But also, whether you go there or you go to this web address right there, go to our contacts, right? And in the notes, just put in something like, "Hey, I want that asset guide." That kind of sounds like something else guy instead of asset guide, huh? I need to enunciate my words a little bit.
What is with you today?
I don't know. Not enough coffee? Maybe too much? I don't know. Anyway, put in something about the asset guide in our notes, and we will email that out to you right away. And what that is a really great guide that compares and contrasts different things like assets versus liabilities. So you've got something you can take it with you when you're shopping at Costco to decide, am I buying an asset or am I buying a liability?
Oh, that's funny. That's good stuff, Mickie. Good to see you again.
Good to see you. And remember, everybody, we're here to help. And if you want to learn more from our amazing money mentor, reach out to Marshall today. Bye, everyone. Oh, goodness.